In this video, I'm going to talk about how I make additional $500 to $4,000 per week in additional income, working almost nothing, just maybe investing about 4 hours per month. And I'm going to explain how it works. But first of all, my name is Luca. I'm a co-founder of TradeLocker and a couple of interesting businesses, some of which are in trading space, which I'm going to show you here. TradeLocker is now one of the most popular and the largest CFD or Forex trading platforms. And we've built this in the last 24 months. So I'm interested in two things: business and selling options. And this is what I'm going to talk about. Here is how I make additional $500 to $4,000 per week. So let's get into it. I'm in trading space, right? And I'm an entrepreneur for the last 14 years. And I've seen different business models. I've seen different trading methods and strategies. And I've seen a lot. And most people who do anything, whether it's building a business or trading, fail. And that's just normal because 50% don't even try, and then the other 50%, 30% quit in the next 3 months, and then the rest 20%, 10 or 15% just lose because they're doing the wrong thing, listening to the wrong people, they're too slow or expect huge returns in a very quick period of time, so they lose money. And then there's just a couple of percent that you actually compete with. It's the same thing in everything in life, in sports, in business, in relationships, in trading, in everything. So this is what is a realistic video of how you can earn additional income too. And I won't bullshit you because I see tons of traders every day, and I know tons of traders, and not many are profitable. You would be surprised. So here's what you shouldn't do and what you should do. This is not about making 10% in a day, okay? This video is about showing you how you can make 1% in a month. That's what you should be happy with. If you have a million, 1% is 10,000. If you earn 10,000 in a safe, very consistent way, that's realistic, right? If a passive fund can give you 5 to 10% passively per year on average, sometimes you win more, sometimes less, then if you actually work on something and invest a little bit of your time, you can expect a little bit bigger, higher return. And 10% in a day is not realistic, guys. If you want 10% in a day, go gamble, go to the casino. If you want something consistent that you can follow and earn almost very consistent, almost guaranteed return, which this is not a financial advice, this is just what I'm doing, I expect 1% or more in a month. If I earn 1%, I'm already happy with that. And that's what you should think about. What is enough money for you? Maybe 1% means $100 in a month, and that covers your electricity bill. You should be happy with that and scale that further, but don't expect 10% in a day. That will force you to gamble and lose money, all right? And don't expect to start with $100. If you're starting with $100, then buy a prop firm challenge and trade with them or prop money. You can earn more there, but that again depends on your skills and the rules and all the other things that I want to talk about here. I'm talking about real money that you have and that you're trading with. And if you want to start trading, first get a job, earn enough money that you have so much that you don't care about that additional income, and save about 10,000 that you are prepared to lose, and start with that 10K. And then third thing is where people make a mistake, they have guesswork. They're looking just at the charts and nothing else, or they have some kind of strategy which actually does not make sense, because I don't know if it's cloudy today, if it'll rain or not. I just know that someday it will, but in a day, I don't know. Today, I have no idea. If I don't check the weather prognosis or weather forecast, I don't know if it'll rain or not. But in the next 3 months, I'm pretty sure it will rain. What I'm talking about, most traders work without evidence. They work without guesswork. There is no edge, there is no preparation, there is no research. What I'm talking about, if you want to win, if you want to have consistent income, you should have high conviction trades with evidence and be prepared to have odds work in your favor. And last thing is the place where it's easy to lose money, and the way to trade to lose money for sure is guessing and doing things that are easy. Anybody can go to the chart, say this is the support level, buy 100 times leverage, and then expect to earn or lose money. That's easy. Anybody can do it. But the real money is in learning and consistent improvement, steep learning curve, and not many people won't do it. As I said, this is the case in anything: business, sports, relationships, trading, anything. If it's easy, anybody can do it, and then you're competing at the same standard, which probably you will lose, because there will be some people that are just ready to do more than you, all right? And what I do to earn at least 1% in a month, sometimes it's 1, sometimes it's 4. This month it was 6%, which is great. I don't expect it. If it happens, it happens, but I follow my rules, which I will explain here. But what I do, basically, you have two sides of options trading. You have the option buyer and you have the option seller on one side. So basically, the buyer pays money upfront to the seller, which is a premium. So the seller gets paid a premium, and that way the option buyer gets what they want, and they want the security to buy or sell shares at the predefined strike price. That's what the buyer wants, and he pays to the seller for the seller to have the obligation to buy or sell shares at that same predefined strike price. It's pretty simple. When I say it like that, it gets complicated because there's tons of strategies and opportunities, but we keep things simple. We have 2 or 3 strategies that we just repeat, and we keep this simple. Okay, I'll explain soon what I do. And basically about 70 to 90% of option buyers lose premium and don't earn money. Who do they lose premium to? Who do they pay to? They pay to the option seller. So immediately, if you choose to buy options, you have lower odds of winning statistically. All right, that doesn't mean that you don't know or you will lose. That doesn't mean that. I'm not saying that. Maybe you're a great option buyer, but me as a person, as an entrepreneur, I don't have time to buy options and actively buy and sell and trade. I actually just act as the insurance for the option buyer, that if he pays me insurance, I can guarantee that I will buy or sell the shares at the predefined price. So I get paid anyways, all right? And this is what I do. Option selling can be risky, and it can also be the best thing ever for generating weekly income with minimum risk. So this is the first mistake people do. What you should not do is trade any stock that you just see has exploded and is viral. There is hype around it. You don't know much about it and you don't care about the stock. You just see the short-term gain and you're chasing the wave. What I do is I only trade or sell options on stocks that I would like to own anyways. If I would not like to, for example, own Tesla, I would not even consider selling options on Tesla, because the risk here is that I would have an obligation to buy 100 shares of Tesla or sell them at the predefined price, which is a risk. But for me, it is not, because I would like to own Tesla anyways. So don't trade any stock that you see. Trade stocks that you like. Second thing, what traders do is they have unlimited exposure and risk on a trade. If I'm an option seller, if I don't have cash which secures my option, or if I don't have stocks that secure the call or cover the call, then I have unlimited risk basically. So what I do is I always own the stocks, the shares that I can use to cover the call. So if, for example, I get paid a premium to have the obligation to sell the stocks at the predefined price, I actually have to own the stocks. Okay, so I prepare. Or if I get paid a premium as an insurance that I will have an obligation to buy the shares at the predefined price, I actually have to have the money, the cash to buy the shares. So I'm always covered, I'm always secured. I don't have unlimited exposure. Okay, I always know how much I'm going to risk. And then the next thing is what traders who lose money do is they choose a strike price with high income potential, like, okay, so the profit is high, but they are very likely to get assigned at the price that they don't like. For example, the traders that sell an option at the strike price, which is pretty low discount, so the discount is not attractive, and they will get paid higher premium, let's say 5%, but it's likely that they will have to buy 100 shares at that risky price. They are very likely to lose, right? They'll get assigned, they will lose cash to trade with, and they will have to hold that stock and wait until it grows up or sell it at a loss. Compared to what I do is I look at Tesla. If it's $300, I would sell an option with a strike price at 250, which means that I would actually love to have Tesla at that 15-20% discount at $250 instead of $300. And if that drops and I get assigned and I have the obligation to now buy 100 shares of Tesla, I'm happy to do that. I would love to do that. If the stock dropped, in any case, I would probably buy it at that price. I think that's a good price for Tesla. So I would do that. So I always look at strike prices that are unlikely to hit, and if they hit, I would love to own them. Why? Because they're at a steep discount. All right? If you just trade options and sell options at a discount just for quick cash and are likely to get assigned, you'll quickly be either a long-term stockholder or you will be a holder that lost money because the stock is at its peak and maybe never returns, so you're risking. And I repeat, I always buy at the price where I would buy anyways. If Tesla is at 300 and I'm praying for 250 because that's where I would buy, I would usually sell a cash covered put. So if Tesla is at 300 and I would love to have it at 250, then I will sell cash secured put at 250. If this doesn't happen, I will earn my whatever $1,000. If it happens, great. I would love to own Tesla at 250 because it's very unlikely that it won't grow in the longer term. And if I buy it, if I get assigned and I'm obligated to buy at 250, then I can always cover the call and earn while for as long as the stock is below the next strike price. All right, I can explain it in another video. But what I also don't recommend is chasing premiums that are too high. A high premium means that the probability that the option will get you assigned. What I also don't recommend is selling options at a high premium. What that means is option market is pretty efficient. If you get a high premium, then it's very likely you will get assigned, and if you get assigned, you will need to buy or sell the shares at that price. Now that is a problem because you may not be, as I said, secured, and you will have unlimited exposure. And even if you have limited exposure, which means you will buy, you have the cash to buy the shares or you have the stocks to sell them, if you get assigned, you will still get assigned. And then you don't have that cash to continue trading with. What I recommend is be happy with a minimum premium of 1% per month. If there is an opportunity where Tesla is at a low price and even if you get assigned, you're fine and you get paid 3% in a month or 5% in a month, go do it by all means. But most of the time, the market is pretty efficient and that won't happen. You have to be happy with lower returns, beat the market, be consistent. That's more valuable. And the last thing is most traders don't do research, don't use the tools or data or have no edge. Because why? They expect to earn a lot of money same day. What I do is I expect to earn money, but not today. I have trades in minimum of 10 days to 6 weeks. They last in minimum of 10 days to 6 weeks, sometimes even longer depending on strategy. And I don't need to predict. I just choose options that and the strike prices which are very unlikely or likely to happen. And I use other things like fundamentals, technical support and things like that. So if I have to buy a stock and 100 shares of that stock and I need to pay 20,000-30,000 for it, I'm happy to do it. And the bonus is if there is a steep discount, which I cover here, if the stock issues dividend, that's amazing because then I can earn on a dividend. If it's got strong fundamentals, so PE, price to earnings ratio, or the profit margin of this stock of this company is huge, that's another bonus. If there's technical support, if you believe in technical supports and things like that, that's amazing as well. If there is hype, if it's a crypto stock like MSTR and the Bitcoin is skyrocketing, then of course I expect MSTR to go higher as well. That works as well. So I use the data wherever I can find it and I use that as indicators. So if you follow these rules, you're almost 99% sure that you can be consistent and for every mistake you have an answer. For example, if you get assigned and you have to buy 100 shares, that's great because you love that stock, you expect it to grow in the future, and while it's growing you're getting the dividend, and while it's growing you cover the calls and earn on the upside. So you're fine. You always have the answer to every problem. And to do that, what I've started working on as a business side, as an entrepreneur, is I work with Interactive Brokers. That's my broker, and we've developed a tool called Quantwell. Now, why Quantwell is cool is because it answers a lot of questions that you might have as a beginner or an expert. A lot of times you're confused and you don't know which stocks to trade and options to sell. Now what Quantwell does is it gives you the answer, all right? It saves you time and it calculates the maths that you cannot because it will take you too much time. So first of all, what you do is if you log into Quantwell, you have daily actions and you have optimize your trading. If you want to start, first you have to update your watch list. So you add stocks here. For example, if you want to add Tesla, you just add Tesla here. All the stocks will be listed. When you're done, you set the preferences, how much you want to earn per year, how much you want to risk. And once you're done, you go to generate income. Now, when you go to generate income, you're not done. You first need to select your watch list, adjust the strategy. So if you want to cover call, cash secure put, so just choose the strategy and then adjust the ranges of expected income, the date to expiry, risk, and so on. Once you're done, you will see a list of all the options. All right, I'm recording this now on 4th of July. The stock market is closed, but if it was open, you would see a bunch of options that you can trade. And now what you can play with is how much you want to earn in what time period and things like that. And for example, Circle here has the strike price of 75. Right now it's at 181. This is how it looks like on the chart. So basically, in case this option would expire and you would get assigned to buy the shares, you would have to buy them at $75 per share. And right now they're at 188. All right, this is a pretty volatile stock. So there's still chance that this might happen. But even if it happens, would you rather own it or not? If you like Circle, if you like crypto, cool. Then you would not mind buying it at 58% discount. Huge discount. Like right now, if you want to buy it, you have to buy it at 188. But in this case, you would buy it at 75, which is 58% discount. And you would earn 6.2% yearly. Now, this is a pretty low yield, but I'm just showing you examples because this is a huge discount, so the yield is lower. I'll show you the other side, but let me adjust the yield to being 1% per month. I'll show you how that works. For example, yearly yield here is huge for example, CoreWave, and now I will choose the steepest discount for CoreWave is 62%. Now I can scroll down a little bit, and let's say I'm happy with about 15% per year. What I can do here is I can sell cash secured put at a strike price of 77.5, which in my opinion, knowing CoreWave and what they do, is highly unlikely that will happen. If it happens, you will buy it at 52% discount and you have 44 days before the option expires. The highest risk is you buying this quality stock at half the price, and you will still get paid 1.9% on that 7,750. And that means that translates to 15.3% per year. That's huge. If you ask me, that's an option I would trade. I already traded CoreWave at much higher yield. Now the yield is much lower, but for example, which trade I would take is this one. I'll just show you very quickly. So as I said, I trade with 10 to let's say 45 days expiry, and I would look at the price of around 100 of strike price. That's what I traded before, between 100 and 120. Look at this one. For example, it's 30 days till expiry, 35% yearly, 3.2% yield, and even if it drops 25%, you'll still own 100 shares at $120. Unlikely this will happen, so we calculate the risk for you as well. The risk is about 13% only, and it's connected to delta. This is the creek that shows you the risk in indirect way, and you can see that this might be a winner trade. So this is how I earn $500 to $4,000 per week, and I'm documenting everything here on YouTube channel and on X. And I want to show you my TradeZella account. I'll show you my brokerage account also in the future. But right now I have $13,000 in profit. I started in April, but I was moving a broker, and I closed some positions here. I got the money back, and then June was pretty successful month. July is I'm going to update July soon, but this is how I earn money. This has been a trading side of my YouTube channel. Follow the YouTube channel if you want to learn more also about entrepreneurship and how we build Quant Wealth. Thank you for watching.